The real estate market is going to get worse before it gets better. TREB just released its most recent monthly stats, and the numbers are not good. And the reality is, affordability is the big issue, and this government just doesn't get it. Thanks to all the viewers. If you haven't already, please subscribe, like, and share. And if you hit the little bell, you're going to get notified as soon as I post immediately. So many realtors and industry folks have been beating the drum about how well this fall market is going to perform after 3 Bank of Canada rate drops. Well, the reality is the stats are not as good as people think. The TREB stats show the real estate market in the GTA has no sign of life. We've seen just under 5,000 sales in the month of September, 4,996 to be exact, and that's only 21 units more than the previous month. Now, TREB likes to spin the numbers and say, yeah, we're up year over year, but the reality is last year there weren't 3 rate drops that preceded the month of September. So these numbers are absolutely dismal. We have seen in 2020 and 2021 average sales in the month of September at about 10,000 plus. That's double what we're seeing now. So any sign of life is actually just not happening. What's the reason for this? It's affordability. This affordability issue will not fade away even leading into the next election. This is going to get worse. It's going to get terrible. And the reality is folks are just not biting into taking on a big mortgage and costs if they're not confident in their employment and how the market's doing. We've seen the 5-year fixed rate drop 150 basis points from its all-time high last year, and it still hasn't sparked the market. The reality is calculations shown by the Canadian Real Estate Association show that a 5-year fixed payment mortgage is still 40% higher than it was in January 2020. And that's even after the drop in rates from a year ago. For affordability to return to normal levels, we need to see at least a 10% drop in real estate values and interest rates cut in half, basically a drop of 50% from where they are now. Many borrowers can't fit in the traditional prime lending guidelines. They're having to resort to alternative and private lenders, driving costs up to carry their mortgage and basically just decimating their household disposable income to purchase anything else. So the economy will slow as folks adjust to these higher payments from where they were in 2020. The federal government's most recent policies to increase the CMHC cap on first-time homebuyers to $1.5 million from $1 million and stretching out amortization is only going to drive prices higher. So affordability will not improve. Expect this situation to take a while, and it's going to surpass the next federal election. There's going to be a lot of cleanup to do. Our part-time finance minister recently reported that she doesn't think that these programs will inflate prices. She believes that it will incent builders to build more homes. Well, the reality is, in speaking to builders, they're not going to be coughing up development charges in advance when there's no demand for purchases at the levels they need to sell homes at to recover their costs of land, development charges, construction, labor, material. It's just not going to happen. The bottom line, we need adults running this country. We need all levels of government to align with each other to solve this problem. Affordability is the issue. We need homes that cater to families and seniors, and we have to get rid of these one-bedroom condos that only appeal to a certain segment of the population. So folks, demand better. We need change. We need more tools and solutions that are going to get us out of this mess. Otherwise, it's going to be a while. Tighten your chin straps on your helmets. It's going to be a really bumpy road over the next 12, 24 months. And folks, we're getting close to 10,000 subscribers. So please subscribe, put mortgage in your comments, and you will be entered into a draw for a free prize. Thanks for watching.